Good morning, fellow option traders. This is Jeff. Welcome to the daily scan for Monday, February 25th, 2013. So just to make sure I had the date right, it was a crazy week last week. I really made one video, but that was before the craziness started to happen with all the grandkids down here. We just had a wonderful time, and I am so happy that they came, and that I got to spend a lot of time with them. They are just so precious, so precious. Okay, so because of that, I was just kind of watching the market on the side, pulled off a couple of trades, ended up pretty good with that GLD gold ETF calendar that I'm not going to cover today, that I'm going to cover in a separate video. Really lucked out on that particular trade last week because of the big drop in gold, and you can see that gold is down here at $15.91, and it's actually up almost $20 overnight on the futures. But it was over 1660 when last I made that trade, actually. So it was a big move, and that's the secret of calendars is IV. When IV goes up, we make money, and that's what we're waiting for on this MasterCard trade right here, is for IV to move up a little bit. Last week I took a peek at it when the market pulled back. I don't know, it was Wednesday or Thursday when it pulled back. Let's take a look at the ES here and pull up the chart. Yes, this was on Thursday. This was Wednesday and Thursday. And that's when that MasterCard actually was pretty interesting in what it did as far as the calendar is concerned. And as we move forward in time a little bit, we'll take a look at that one also using Thinkorswim Platform's Time Machine, and go back and take a look at that one and show you how in real life IV can have a big effect on calendars. And I'm also thinking very heavily with this Sequester thing happening. Probably on Friday, I'll be on the road on my way back up to Ohio. But with that happening on Friday, I'm thinking about buying some insurance, and I'm thinking about some SPY calendar, and I'll talk about that later. But I wanted to take a look at the open positions that we have right now. Amazon, we're still waiting for that one to do its pullback. As you can see here, we sold an at the money credit spread back when the price was around 262. We're still waiting for it to make its move. And take a look at a chart here. Oops. All right. I'm sorry, I touched the wrong key. I'm out of practice. You know how it can be sometimes. We're still waiting for it to, bought it here on this day, waiting for it to pull back a little bit, expecting it to. This is a move down, and then this could be considered a bear flag of sorts in the old candlestick dictionary. And then another move down. So looking for that. We still have until March, 3 weeks, so we'll just wait for that one to develop. Same thing with MasterCard. It also is a March expiration, I believe. Yes, it is. We're looking at March here. So we got time for this one to develop. This was actually losing money until the VIX moved up above that 14 level. Actually moved into 15, and it was really looking good. And then now it's back down to 14 again. But I'm not worried about it. Not worried about it at all. Okay, let's take a look at the A+ list and see what's going on. Remember, it's been a while since I looked at this, so this should be interesting. Alright, we'll take a look at Apple first. And we're still in a downtrend. Our stochastic is down. We did get a little bit of a hook at the halfway mark here on the long term, which basically is this little move here expressed on the weekly chart. Not a good entry. This was a good entry here, and this was last week. No, this was the week before that, and that was really a good entry. I believe we might have done something back then. Amazon we took a look at. Baidu, let's see here. Baidu, we're too flat here on the stochastic. Baidu continues to pull back. I thought that actually this would be support here around 95, and it broke through that. But we're still waiting for an indicator to get in, and we will be patient. CF, I'll take a look. We'll take a look at that one on. I have that as an iron condor in the paper trade. We'll take a look at that later. We'll take a look at that entire portfolio later. But CF right now is not looking good as far as the iron condor is concerned. But we have until March on that one too. So we may have found support here at 200 and may bounce off of that and move up a little bit. I'm sure they had some sort of, I guess, bad earnings, right? What do we got here? They paid a dividend. Whoa. So what's wrong with that? The estimate was $6.99 and the actual is $7.40. So there must have been some forecast about the future out there someplace that did not look good. Chipotle, see if anything's developing there. Yes, we do have a trade here on Chipotle. Stochastic, we were looking for one back here. Stochastic did not cooperate, and here we got a really nice hook on both %K and %D. We have the MACD momentum moving up, and on the long-term chart we have the, is this a 9-day or 15-day? That is a 9-day EMA. It's bounced off of that, so that's a good, that looks like a good trade to go along with a bull put. So I'm going to put an alert on that above this high here, which was Friday. So we'll put an alert on last, and that's good at or above. So now we have an alert there. All right. Salesforce. We have a hook up here on %K. We don't have confirmation on D, but we do have confirmation on the MACD. We do have a little hook up here on %K on the weekly. Really hard time finding that, but it has moved up just a little bit from 43 to 46, so that also is a possibility. But I'm going to put that alert up a little bit higher. So we'll add an alert there and we'll take a look at it. Doesn't mean that we're going to just jump in, but we'll take a look at that one and see if it triggers today, see what's going on. Google. We almost got down here to 20 where we have our hook on %K. We have a little bit of a move up here on the MACD. This also, I mean, they actually moved above 800 last week. I thought I heard that in the background someplace. Possibility here too, but I definitely want this above this high here. At sometime right at the open, it popped up. That 800 level is a point of resistance, so we'll add that above the 800. 801.94, we could make it 801 even. And it doesn't want to cooperate there. Not that it matters. It's just a few pennies on Google, doesn't really matter any at all. Alright, so we have an alert on Google. MasterCard. We took a peek at this one before. We are in that one. Netflix. Missed this one. This could have been a trade. Especially a weekly at the money type of trade for Netflix. A little concerned about this drop off here, and we're not getting real good confirmation off of this, but I will move this over to here as a focal point and see if we can get a nice bounce there and continue this uptrend on Netflix. I always want them to be successful. I think it's a pretty cool thing that they do. And I'm subscribed to them, and then I drop out, and then I subscribe again, and then I drop out. When I find that I do this about every 6 months or so. As new movies come out, it's just not worth $7.99 a month to watch old movies for me when I can get them other places for free. So I wait for the new movies to accumulate and then watch a bunch of them, subscribe, watch a bunch of them, and then drop out again. Alright, this is nice looking here for Priceline. Even though both days were down days, we do have a hookup here on the stochastic on the percent K. Nothing on percent D yet, but we have a little hookup on the MACD also. And any confirmation over here? Well, the moving average is still moving up, but the actual current MACD value is decreasing on the weekly. Obviously, it looks like it might be running out of gas on the weekly, but there might be, or on the weekly chart, but there might be a short-term trade here. So we will put an alert here also. Again, not saying that we're going to actually get in on this thing, but we have an alert. Okay, and these are all bull put trades so far. And last but not least, the second P out of the two Ps, PNRA. Yeah, there's definitely some support here down at the 154 level area. And it looks like it might be bouncing off of that again. We have a hookup, movement up, no confirmation over here on the long term, so we would be looking for a short-term trade. And actually, does PNRA have weeklies? No, they appear to not have weeklies, but March 13th is only 18 days away. So we are going to put an alert on PNRA anyway. Up here in this range. And we'll see what happens today. Not guaranteeing that I am going to enter or anything. I just will take a look at what these indicators are showing me, especially on the short term. Look at the midterm and the short term for my entry. Okay, so that's it for the A+ list. Now I want to talk about this insurance here. And my previous choice was on the Qs. This time it's going to be on the spiders. So what I'm thinking of doing is, let's take a look at the chart. Alright, we have, I don't know where these slices came from. Let's delete all drawings. Okay, so where are we looking for a pullback to? If we look over here, we're looking at previous low was back in November, and that was around 136. So if we're going to take a dive here, I would pick a calendar around this 136, 138 level. And I would pick probably like an April, May. So I'll go into April here, and I'm not showing 136 here because I don't have enough strikes opened up, but I can still right click here and say I want to buy a calendar, and I'll just change the date here to, the amount here to 136. And let's see, that's only 34 cents. That's how much that's going to cost me. Let's take a look at the risk profile. I'm going to take these other ones out. Alright, let's take a look at the risk profile. Squish this down, move this over, reset everything. Alright, so now we're saying that if this moves down to 136 and at expiration for April, we're talking max of $256, and we're paying $34 for the trade. If we did 10 of these, it would be $340, which is not a bad thing to do for an insurance policy as far as I'm concerned. So this is something that I'm probably going to take a serious look at. Let's go back and look at the chart again. This 136 level. Let's look at 136 and see how much that one. Oh, we are at 136. All right. Yeah, 136, 137. Let's take a look at how much that one would cost. That one is 39 cents. I might feel a little bit better with that one. We have a nice range here. Up to 146 is profitable, and down to 126 would still be profitable. But you know what's going to happen. If the price does pull back, volatility is going to go ape. So if we add 5% to this volatility, we are now looking at an additional almost $100 there, if I'm correct. Let's reset this parameter. 251, and we add 5 to it. We move up to 327. So that's an extra $60 pretty much overall in this whole area here. And actually, if volatility moves up, even if it's a losing trade, we still have a good possibility of almost ending up flat, unless the market just takes off and goes into the stratosphere. So that's my suggestion for an insurance policy. So I'm probably going to go with that today. So I'm going to make a note so I don't forget. Spy Insurance. Make a note to myself. Alright, now the last thing I wanted to do, I know we're running a little bit long here, but I have a lot to say. Last thing I want to do is take a look at the test profit tent portfolio that I have going on in paper trade. Let's show all positions and portfolio beta weighted to SPY. Alright, reset parameters, reset slices, and we will take the Q's out of here. Alright, so this is what the profit tent portfolio looks like, and this is CF. Remember, we talked about CF before and how they are actually, the actual trade is losing money, so let's shut off everything else, including SPY, and let's take a look at this. This is the current price right here, 152. We're out of the profit range here, and that's what's distorting the profit 10 portfolio when we take a look at it. If we were to take a look at individual ones, we can see that this is our current price right here on Amazon. Let me change that over to Amazon right here. That's our current price on Amazon. We'll just go to single symbol here. This is CF. We have it shut off. Current price here. Chipotle. Turn it back on. They're within the profit range here. MasterCard. They're well within the profit range. Priceline. And remember, we choose these because they have higher volatility than what I was doing before with the Qs or the spiders or any of those index-based ETFs. And the Qs, remember, I had 1,500 shares of the Qs, and I sold 15. I did a covered call on it, and I sold 15 69 strike calls on it for March. They may expire worthless or they may not. But no matter what, this is, if I get called away on these, it'll be a very nice trade. So just to show you that, you know, if you stick into some of this stuff long enough from a long-term perspective and do a few covered calls here and there, over time, this particular trade, although there's a lot invested in it with 1,500 shares, is showing a profit of $6,500 if I get called away. So there's nothing wrong with that either. All right, so back to this, and we'll say beta symbol is the spiders, and we will take one last look at the entire portfolio here. Looks a little crazy, doesn't it? But still, even if we don't do anything and everything remains the same, it's still a $300 profit. But if CF comes back, we could end up, excuse me, in the $700 or $800 profit on that for the month. So that's not bad. We'll keep an eye on that, and I will report periodically on this particular trade. All right, that's it for today, everybody. Thanks a whole lot for watching. Thanks for coming back. Have a great day and happy trading.